All right, thanks everybody for joining us. Appreciate you hopping on the line here and learning more about Cove Capital Investments and why multi-tenant retail, why now? It's an asset class that we're very interested in and excited about at Cove Capital Investments. Given today's day and age and kind of where the capital markets are at, where the real estate markets are at, where interest rates are at, and the uncertainty in the world, we think that there's some definite potential for us in terms of new acquisitions in this asset class. And we're going to be going over that today. So appreciate everybody joining the line today. My name is Dwight Kay. I am the one of the founders as well as managing members of Cove Capital Investments. And we're going to go into, why multi-tenant retail, why now, some various aspects of the asset class that we like, some various opportunities that we're seeing out there. Why multi-tenant retail and why now? It's an asset class that not a lot of investors or professional investors, institutions are focused on. They kind of were focused on them in the yesterday, right? In the previous years when it was a more in favor asset class. And what does that mean? That means pricing was more expensive back there, in our opinion, than today. We want to be in a situation where we're buying opportunistic acquisitions that are asset classes that aren't what every other professional investor, institutional investor, sponsor is going after. Right now, multifamily and industrial, those are hot asset classes that a lot of attention is given to, and that's because of its perceived performance. And yes, absolutely, we like those asset classes. We have exposure to them in our portfolio, and we're continuing to bid on and offer on multifamily and industrial properties, underwrite them, and we will have future acquisitions in those asset classes. But when we want to be opportunistic, we want to go to areas of the market that there aren't a lot of buyers, that there isn't a lot of interest, and that's where we feel that there's potential value for ourselves, as we are investors in pretty much every single one of these Cove offerings, as well as for our investors. So the question is, why multi-tenant retail and why now? Again, people, sponsors and institutions, they're looking for multifamily and industrial assets and, asset classes that, don't have distress or as much distress as you're seeing in multi-tenant retail right now or multi-tenant office. And, that's nice, but ultimately that means you're going to be paying, for that perceived level of safety. Right. And so we're looking for opportunities for ourselves and for our investors. And Warren Buffett, I think, says it very well. Everybody's heard this before. A lot harder to stand behind this and invest based on these convictions than it is to say it. But be fearful when others are greedy and greedy when others are fearful. That's what Warren Buffett says. So right now, people are fearful of multi-tenant retail. Right. It doesn't have that long-term lease. Retail, there is, some shift, quite a big shift to online shopping, and it just doesn't have that, popularity that it used to have back in the, 5, 10, 15 years ago, right? And that's when I think that, 5, 10 years ago, being really fearful of overvalued assets and things that just didn't make sense from a per square foot basis. Cap rates are super low, and just kind of, opportunities that, hey, it might be a great asset, might be a good tenant mix, but the price just didn't make sense because there's too many buyers in the market. Well, now it's a time to be greedy because not as many people are interested in these types of asset classes. We're going to quickly go into, some of the reasons that we like these multi-tenant retail centers. You've got high CMBS loan default, distressed assets out there. You've got poorly managed retail centers. You've got deferred maintenance and undercapitalized owners that, essentially don't have the reserves to put into the properties to keep them a place that the tenants want to be at, where shoppers want to go. And then we have also potential opportunities. So the first one, high CMBS loan default rates. I mean, at Cove Capital, we're definitely contrarian in that, when we're buying these, we're buying them debt free. We don't have a loan. We're not going to have a loan on these assets. And that really helps to mitigate risk, where a lot of these other buyers that bought these centers 5, 10 years ago, they put, very high loan to value CMBS debt on them or other types of debt on them. And those property values, because of interest rates going up, because of just everything happening in the world today, values are down. So that, 60, 65, 70% loan to value back then might be at 80, 85, 90% loan to value, and it's coming due, this year, next year, 2025. And so that's where opportunity is. So the Cove Capital team, we're super proud of. We're headquartered out of Torrance, California. Feel free, come out and visit us. We'd love to host you for the day and walk you through our teams and various departments.